The Gap is another retailer getting a lot of attention these days. The stock is up 30% this year, and it's expected to report strong earnings next week. Now, the Gap is popular again with shoppers after a long stretch of being criticized for fashion missteps. Tonight, we take a closer look at the turnaround at the Gap as we kick off a week-long series on comeback companies. Courtney Reagan has the story.
The turnaround for Gap Inc. has taken nearly a decade, but now that the puzzle pieces are in place, consumers and investors are falling back into the Gap.
The denim seems to be better. I like the washes, I like the fits. So that was always a draw at the Gap, but now their novelties in their colors I like as well.
Wall Street credits the inflow of talent, improved supply chain, e-commerce prowess, and of course those brightly colored skinny jeans for stronger sales at Gap and its Banana Republic and Old Navy chains. After years of what many described as being stuck somewhere between H&M and J. Crew on price and style, Gap seems to have finally rediscovered its sweet spot.
People have a very positive bias on the leadership team. I think they've done a great job controlling expenses and building the business for the longer term. And I think what's been interesting as of late is the product has really turned and they've embraced that message of really what Gap stands for.
Gap's fourth quarter profit increased 61% year over year. Operating margin improved from 7.6% in 2007 to 12.4% in 2012. April same-store sales increased 7%. The retailer increased its first quarter earnings guidance, and on Friday, S&P upgraded Gap's credit to investment grade. CEO and Chairman Glenn Murphy says Gap Inc. has been executing its strategic plan to become a global retailer with a dominant portfolio of brands since 2008. We've made meaningful progress each year, and we're pleased that investors have taken notice, especially since early last year. Gap shares have returned 78% to investors over the past 2 years, doubling the performance of the S&P Retail Index, though some question whether the strength is sustainable.
Well, the average analyst rates Gap shares with a buy. Sterne Agee has an underperform on the shares, concerned about the recent departure of creative advisor Tracy Gardner. KeyBank has a hold on the stock, believing that shares are currently fairly valued.
But the company is only looking forward. Part of its growth strategy includes international expansion. Gap says this year, for the first time, it will be entering Hungary and Paraguay with Gap stores. Mexico will get a Banana Republic to join Gap stores, and Costa Rica will get both a Gap and a Banana Republic location for the first time. For Nightly Business Report, I'm Courtney Reagan.